Data from NFT Go shows that in the past 7 days, the trading volume of Blur's NFTs has been roughly 4 times that of Opensea's volume during the same period. In terms of sales volume, Blur has led Opensea as well. On the other hand, the token price of Blur has fallen over 55% in the past 2 weeks, and analysts speculate that this may be due to investor concerns about the potential impact of the second quarter airdrop dump. Is Blur gonna overtake Opensea's place? Would Season 2 airdrop becomes another stimulus pack for crypto market? You are now watching our Galaxy channel, where I believe Web3 is everyday changing our galaxy. Last month, NFT aggregator trading marketplace Blur announced the launch of $Blur token airdrops, creating huge wealth effects for many early participants. With the opening of the second quarter airdrop, trading activity has continued to be hot. According to data from NFT Go, in the past 7 days, the trading volume of Blur's NFTs has reached nearly 255,000 Ether, approximately $400 million, which is roughly 4 times the trading volume of Opensea during the same period, which was 72,300 Ether, $113 million. This also suggests that although Blur's trading volume is significantly higher than Opensea, much of its volume may be driven by wash trading by airdrop hunters, who use this rapid turnover method to obtain future token airdrop rewards. The sales volume of items with lower prices on Blur demonstrates that Opensea remains the primary trading market for collectibles. In addition, it is worth noting that since reaching a high of $1.40 on February 20th, the price of Blur has continued to decline and was temporarily reported at 62 cents before the moment. Over the past 2 weeks, it has fallen by more than 56%. Analysts speculate that the reason for the decline in Blur may be due to the second quarter's airdrop, which will further increase the token supply and bring greater downward pressure on the price. According to the tokenomics released by Blur, the total supply of Blur is 3 billion, of which 51% of the tokens will be allocated to the community. The first airdrop distributed 360 million tokens, 12% of the total supply, and the official announcement was made recently that the second quarter will airdrop 300 million tokens, 10% of the total supply. If we look at the current circulation of Blur, which is only slightly over 400 million, the 300 million tokens airdropped in the second quarter will account for approximately 75% of the circulating supply. It is also speculated that the airdrop rewards may fall into the hands of a small group of people through wash trading, and the arrival of the airdrop will inevitably cause significant price fluctuations for the token. According to statistics from CryptoSlam, since Blur launched its token airdrop on February 14 until 28 February, a total NFT trading volume of $10.2 billion has been recorded. However, as much as $8.24 billion, about 80.5% of this volume has been marked as wash trading by the platform. In comparison, competitor Opensea facilitated a total trading volume of over $2.49 billion during the same period, but only about $6.6 million worth of wash trading, accounting for approximately 2.5% of its total trading volume. In other words, according to CryptoSlam standards, Opensea still handles more organic NFT trading volume than Blur. It is not difficult to understand why there are so many wash trading activities. Last week, Blur announced that the second quarter reward program would distribute 300 million Blur tokens. To get more chances for airdrops, users need to list their NFTs on the platform and make bids as much as possible. For example, Marchie Big Brother, a well-known NFT whale who received 1.85 million Blur airdrop tokens in the first quarter, has been actively participating in the platform since then. He currently ranks first on the second quarter airdrop leaderboard with 99,220 points. While everyone was immersed in the joy of the Blur airdrop, Blur opened a new chapter in the competition for royalties by announcing a new royalty policy. One of the policies is to recommend NFT creators to block Opensea. Any collectibles that do not use Opensea can be subject to full royalties on the Blur platform. This has also forced Opensea to announce major adjustments, including a temporary zero transaction fee and the activation of optional royalties. The second quarter reward program will distribute 300 million Blur tokens, and will provide maximum rewards to users with 100% loyalty. However, in the second quarter, there is only one way to maintain 100% loyalty, which is for the user to list their NFT on Blur and not list it on any other NFT market. In addition, Blur also mentioned the calculation method for token rewards. The rewards for listing NFTs and bidding will be the same. The maximum listing score will be calculated as listing quantity multiplied by loyalty. The rewards will also be related to the quantity of listings, the types of listings, and the activity level of collectibles. It is worth noting that Blur has not yet supported NFTs in ERC 1155 format. Therefore, listing ERC 1155 NFTs on other markets will not affect the loyalty calculation method. In addition, Blur also announced 3 feature updates. 1. Bid comparison feature. 2. Display of the starting price of NFT collectibles when bidding. 3. Personal NFT pages now support mobile devices. In my opinion, the future success of Blur still depends on its governance and upgrades. With 0 service fees and 0 royalty income, Blur is currently not making any profit, and its token should not be worth much. To make the Blur token valuable, there are 2 ways. The first is to make it a governance token like Uniswap's Uni, but not participate in staking rewards. The second is to give more value space to holders of Blur tokens. From the current situation, the Blur token is actually more like Uni. This is not necessarily an advantage, as the market currently values actual output more, such as being able to stake and generate income like GMX and Sushi, or generating income through voting and custody like Curve. Staking rewards are indeed a common way to generate income, where users stake their tokens and receive interest like staking rewards, thereby reducing selling pressure. However, if the staking rewards are higher than the actual income, such as Ape staking generating 100% returns, it is like robbing Peter to pay Paul, using inflation to retain investors. In the long run, inflation will only bring more serious harm and compress future value-added space. The price of the Blur token will depend heavily on the voting and development decisions made by BlurDAO in the future. Currently, the price of the Blur token will be directly related to the performance of the Blur aggregator in the entire NFT market, as savvy investors will not give up holding a new NFT market leader. Blur has the potential to seize the huge market growth potential. Compared to Opensea, which was valued at over $13.3 billion in its last funding round in 2022, Blur's current fully diluted market value is only $2.7 billion, which means that there is still a 5-fold gap in value growth potential between Blur and Opensea. Blur still has a lot of value accumulation to be explored, which can increase the demand for Blur tokens in the market. Do you think Blur could overtake Opensea's place? Please leave us a comment. You are now watching our Galaxy channel, where I believe Web3 is everyday changing our galaxy. Last year, I created our Galaxy DAO hoping to experiment a fully community-driven NFT democracy. Very soon, Luna crashes and FTX fell down, but I have not stopped learning from my new Web3 job. If you like the video, feel free to support and become one of our Galaxy pioneers. Each Pioneer NFT would be increased $0.001 ETH per mint. And you get 25% cashback from the next sales. You can read the full mint guide in the link below. Remember, investing in cryptocurrency and blockchain is highly volatile and comes with significant risks. It is important to only invest what you can afford to lose and to always do your own research before making any investment decisions. This video is not financial advice and should not be taken as such. Thanks for watching.